Broadcasting from the Allen B. Levan NSU Broward Center of Innovation at Nova Southeastern University. Welcome to Sunshine Startups Live, featuring rockstar entrepreneurs, bright ideas, and experts on the startup ecosystem. And now your hosts of Sunshine Startups Live, Jim Ryan and John Wensveen.
Hi, and welcome to another great episode of Sunshine Startups Live. I'm your host, entrepreneur, investor, and startup enthusiast, Jim Ryan. Got a great episode on deck for you today, and of course, I'm joined by Chief Innovation Officer and Executive Director of the Levan Center, my friend, John Wensveen. John, it's great to be with you again.
I am glad to be with you, Jim, and welcome to the world's first theme park for entrepreneurs, the only model in South Florida to support the founder journey from birth of an idea through successful exit or global expansion. And I'm very excited about today's conversation.
It is, and likewise. And the purpose of the show is to talk about the state of Florida, the burgeoning ecosystem, startups, and those that help foster the ecosystem. And one of those individuals today out of O-Towns, Orlando, Central Florida, is Rob Panepinto. He is managing partner and chief investment officer for Govo Ventures. And really excited, Rob, to have you on the podcast today.
Yeah, thanks for having me. Good to be here.
So kind of want to like to always wind the clock back, talk about your background a little bit, entrepreneurship. Sure. And we always see a little bit of a pattern that way with those that are in venture capital that have, walked the walk themselves. And you are obviously one of those individuals, being a former entrepreneur. So maybe you could kind of tell us a little bit about your background.
Yeah, no, I'm happy. I'm happy to. So New York, actually New York City, born and bred. I'd like to think I was one of those pioneers who left New York City before everyone thought it was really cool to leave New York City. I left in 1993 after my wife and I got married and just was completely enamored with Central Florida and Orlando, and initially from a personal standpoint, and then increasingly from a professional standpoint. So I spent the majority of my business career in Orlando as part of the founding team of a company that ultimately became one of the leaders in helping health insurance plans sell insurance directly to consumers, both through CRM technology we developed and also licensed agent call centers. The business started as an audio cassette manufacturer, however, so could probably do a whole separate podcast on the 9 or 10 pivots we made to get from making audio cassettes to selling health insurance. All happened over really just over 6 years. We were very fortunate to grow that business rapidly over time, right? It was an 18-year journey, but fortunately we grew it pretty successfully. We did a private equity recap of the company in 2006, and then we sold all of it to Optum, which is the service arm of United Healthcare, in 2011. By that time, we were about 5,000 employees and a little over $200 million in revenue. I stayed for about 2 years. My excitement for working for a Fortune 10 company waned, would be the way to say it. For all reasons I completely understand. So I certainly bear no ill will to the folks who purchased our company. It's just different, right? It's just a different animal. Mm-hmm. Although I will admit a little disappointment because we were purchased at a time of rapid change in the healthcare system. It was right around Obamacare, which is the reason they bought us. And so, you go from being this little entrepreneurial engine that could, thinking, wow, now we're part of the big mothership. Look at all these crazy things we could do. And you pretty quickly realize they really don't want you to do too many of those crazy things. So I left about 2 years afterwards, as did most of my other partners in the business. My daughters were, in their early teens at that time. You could sort of see the end of the road when maybe they weren't going to quite be around. I'd spent a lot of time on the road the prior 10 years. And also by that time had been pretty involved in the community and had started to see what was emerging in Central Florida. And I just decided, rather than do another startup, having been involved with one for 18 years where people only remember the last 18 months, I would try to go help others. And so that's really where I've spent the last more than decade now, largely in Central Florida, but increasingly throughout the state. As a direct investor with, my own small family office and being involved with some of the local emerging funds. I know you had Kathy Chu on here from Deep Work a couple of weeks ago. I was involved in their first two funds. I still have a part-time role at the University of Central Florida, helping run their business incubation program, which is driving a lot of innovation in our in our region. I started a social impact accelerator called Rally, which started as this little local Orlando thing, is now an international program that I'm very proud of. And I've started 2 funds. The first was a small social impact fund, really to prove the model that for-profit social impact companies could do good and also be profitable and exitable. It's called the EIA Social Enterprise Fund. We're kind of winding down that fund now. It's at the end of its runway, but we've made 9 investments in the state of Florida, often the first check. Some really great companies throughout the state, including a couple we'll probably talk about today. And then last year, with several partners, I started Govo Venture Partners, which is an early stage fund based out of Orlando and Miami, focused on companies that are in regulated industries or those selling to government. We closed that fund last December. Timing was interesting, which I'm sure we'll talk about. But we're really excited about progress we've made. We've made 3 investments so far, two of which are in the state of Florida.
So it's interesting you mentioned the word government. I was doing a little research on where you are, and it's interesting. Is helping companies get into those highly regulated spaces, often there's a lot of risks and barriers that come with that, especially things related to timelines and others. But I'm really curious, what made you go into that space, and are you relatively new as a pioneer, or are there others that have come before? And I'm just really curious because when you hear the word government, you want to run sometimes.
Yeah, no, and that's part of the reason we're doing it.
Okay.
Well, go back to my previous story, right? The company I was involved in, Connections. So I didn't realize this at the very moment, but certainly in the formation of Govo, this happened. I can basically tie our 2 largest periods of growth and our private equity transaction and our sale to changes in the regulatory environment. So when the second Bush administration created Medicare Part D, and all of a sudden millions of seniors needed to enroll in an individual product, we went from this really interesting boutique-y business selling insurance here and there to one where every health plan in the country called us and said, how can you help us? And then there is no doubt that as United was assessing the landscape of what the world was going to look like post-Obamacare, because this was in 2010, 2011, right? So Obamacare hadn't passed, but it was certainly, Obama ran on it, talked about it, right? It was pretty close to fruition. They for sure felt they needed assets that helped them move into consumer-oriented behavior. So that was an interesting seed that was planted for me. In the 10 years that I post-Connections, I, again, got heavily involved in the community and very much around the intersection of where government and business operated with each other. And I ran for public office as well. I ran for county mayor in Central Florida, largely around diversifying our economy, but it gave me another view into how closely those sectors work. And I won't argue whether this is good or bad, but government, listen, it's always played a role in industries like healthcare, fintech, defense, right? But I think you could argue that it's playing an increasing role in a whole host of innovations. Sometimes as a governor or a brake. If you're in climate tech, our third portfolio companies in the climate tech space, you would say government right now is an accelerant, right? They're trying to push policies and incentives to drive more green energy and green projects. In other areas, there may be more of a brake. I have no idea what they're going to do with AI, but they're going to do something, right? And to your point, particularly at the early stage, a lot of investors will just go, "Oh my God, I'm not touching that." But if you can understand where regulatory change may or may not happen, and then also have some connectivity to help influence it or help leverage contacts and relationships, you can really help these companies scale and grow. One of my other partners in the firm, Jonathan Kilman, who lives in Miami, comes from a lobbying government affairs background, and he and I would kind of go back and forth as he was helping companies make changes to ride-sharing regulation or telemedicine. I would sort of tease him a little bit, going, "You're creating enormous values for these companies, and I know you get paid well, but not even close if you were on the other side of the cable." And so I think our recognition of the broader marketplace from a regulatory standpoint, combined with our ability to influence it and in a positive way on behalf of our entrepreneurs, and that's what led us to start Govo.
Well,
So let's talk about a little bit of the thesis of Govo. You mentioned obviously government. You've got some portfolio companies already. You know, kind of who are those portfolio companies, and then and you mentioned, is that a common thesis across the board in government, or is there government plus in some of these other portfolio companies?
Yeah. So again, they really have to fit one of those two boxes. So either they're in a regulated industry where government, and it could be local, state, or federal level, has an influence on the success of or future of their business, or the government is their client. So they fit in those two boxes. I will say for us too, because we do view ourselves as early strategic capital, which is why I think we're developing some of the relationships we are with the entrepreneurs. We also do assess them around beyond capital. How can we help? I get it. Capital is not easy to find, but for us, we feel that we can be most additive to the entrepreneurs and candidly to our limited partners and our investors. If part of the thesis is that having us be part of the cap table beyond whatever money we put in also has some additive value. So that's
In what capacity would that be, as an example?
Yeah. So I mean, there's the normal things that an early stage company needs just around strategy development, business modeling, financial management, recruiting, right? There's sort of the general things that any early venture capital firm do. But again, for in our case, it's also helping them understand and navigate that environment, that regulatory environment, or the path to commercialization if the government's their client, right? Because often we find the entrepreneurs have a general understanding of what they may or may not be facing, but not a real deep understanding. I'll pick an example, the one we were talking about this morning, where I was just at the board meeting for Kind Designs, which is a Miami-based climate tech that we just led around in and invested in, and I think the CEO there, Anya Freeman, who's fabulous, I think she certainly understood the role government played. But I'm not so sure at the very detailed level, because even people have come up and said, it's a seawall company. How does that fit a government regulatory environment? Well, what a seawall looks like is regulated at the local level. So basically what you can build in Miami Beach or Broward County may completely differ by what the municipal or county regulations were, right? So that level of very detailed understanding is part of the value add that we bring to the occasion beyond just the standard, having been involved in a business that was basically a startup to one that went to a couple of $100 million and went through both private equity and a strategic sale.
And your profile that you look for, is Florida based, or do you look beyond Florida?
Yeah, so we will look nationally. So our first company is a healthcare company in the advanced primary care spaces that is in St. Louis. But our next two investments have both been in Florida. One is a company called Urban SDK, which is a Jacksonville-based company in the transportation data space, selling to local governments, and then Kind, the one we just talked about. So we look nationally. However, we certainly think we have unique relationships and contacts in Florida. We certainly still see Florida as a place that is underserved and undervalued and needs more capital put to the table. And also, if you overlay many of the growth industries in Florida, they overlay pretty well with our investment thesis, right? I mean, I live in Orlando, so just do the I-4 corridor, and you start on the East Coast, and you're in space. You move to where I live in Central Florida, and you're in defense and modeling and simulation and healthcare and transportation with some really interesting micromobility and innovative EV companies, transportation companies. You move out to Tampa. Tampa has always been a home of fintech and healthcare companies. You move down here, you move into things like climate tech and fintech. So Florida is very much on our radar screen because it's who we know, it's where we are. We have great relationships here, but it also overlays with our thesis very, very well strategically.
So the reason I asked about your territory, because and your answer is great, because it provides a great segue into the landscape of what's going on in Florida, and then in particular Central Florida, South Florida, and the Tampa region, of course. All these pieces are starting to come together. The state's truly gluing itself together.
Yeah.
And I'm curious, as you look at this ecosystem around innovation, technology, entrepreneurship, we're earlier stage than some of the more established cities and regions throughout the country. Where are we right now from your perspective, and where do you see us going in the not too distant future?
Yeah, I actually think you hit it. What I think the next phase is all of the great. Basically, if you take all of the larger cities in Florida, Orlando, Tampa, South Florida broadly, right? West Palm, Fort Lauderdale, Miami, Jacksonville, even certainly certainly Gainesville because of the university. You saw largely entrepreneurs, right? Exited entrepreneurs going, we need to invest in our own community, right? So you had all of this grassroots activity that has led to the myriad of accelerators, incubators, programs, places like this that now exist in pockets all throughout the state, which is an amazing thing. And I think you've also seen local government funders step up, right? I certainly know in my neck of the woods, people may argue whether they put enough capital towards this, but look, the city of Orlando, Orange County, increasingly our regional counties, more and more are paying attention to the growth of scalable entrepreneurs in high growth industries and technology in our area, certainly as a means to diversify what's largely a tourist-based economy. We just opened an incubator 2 weeks ago at UCF in the city of Eustis in Lake County.
Wow.
Right? So you'd think of that as sort of this
suburban,
rural,
a drive-by town,
right? But definitely not, right?
Yeah.
Where UCF is now there because the city of Eustis has seen this influx of growth of people, a little bit driven by cost of living in the heart of Central Florida, and have this really great downtown that they view as ripe for economic revitalization, and they view scalable entrepreneurs as a part of that. And when we went up there, we said, look, tough for a municipality to do this. You need to bring the county on. And the county almost immediately said, absolutely. Of course we should have a UCF business incubator up here. So you're seeing it start locally and then regionally, but I'm starting to see those connections as well, right? I think, what Synapse has done to try to broaden. Again, I'll go back to Kathy being here a couple of weeks ago. I love actually, as they've now taken over the Florida Opportunity Fund, them driving those connections as well. Two of our first three investments, the one in Urban SDK and the one in Kind, we led both those rounds. Our co-investors in both of them, the Florida Opportunity Fund, right? And I see them using their role as the state fund to drive those connection points around entrepreneurs and investors. Hey, have you spoken to that person? Hey, have you spoken to that person? I see the Florida Venture Forum starting to do that as well.
And Emerge in Miami as well.
Emerge in Miami, right. So look, I'm starting to spend as much of my time. I've been in Tampa twice in the last 3 weeks. Obviously, I'm down here in South Florida today. I'm Orlando based, don't have an Orlando portfolio company yet, but certainly hope to soon, right? So I'm now, we're connected to other parts of the state. All of the kind of early stage, whether they're angel or venture groups, all kind of now, more of us know each other and talk to each other and co-invest. So I think you will see the local efforts start to pool up into regional and statewide efforts. However, also recognize that each region has a little bit of a different strength and niche in where their expertise is. So I think hopefully we'll continue that. We'll continue the local clustering, but marshaling the educational entrepreneur support and capital resources at a more regional or state level. That to me seems the road that it's going on, and to the extent we can be part of that, we obviously want to be.
So before we go back to Jim, you just got my mind triggered. So Kathy was here from Deep Work. She sat in that very seat. I didn't know until after the fact that she had a side gig as a comedian. Do you have a side gig?
I don't. Why? What's my side gig?
I don't know. I'm just curious. I didn't know she was a comedian because I would have asked her questions about it. Are you? I don't know.
No, between Govo, UCF, I got enough main gigs trying to help entrepreneurs in our community.
Well, with those many entities, you're definitely a juggler then.
I got enough.
So juggling would be maybe a skill that. So that's pretty funny, John.
Yeah.
So, and a great recall for Kathy, bringing her back up.
I'd actually forgotten that myself.
But we obviously digressed here talking about juggling, but as you grow your portfolio and government and look in and out of the state, are you finding quality deal flow today? Obviously, there's struggles with the economy. Some startups even are kind of maybe holding back a little bit. What's your perception of the market today for Govo specifically?
Yeah, so there's a couple of different filters to answer this question, right? Because there's the entrepreneur side of it, and then there's the investor side of it. So in terms of pure deal flow, right, the things that we get to see both at the state and the national level, we went into our thesis presuming there was significant opportunity, and I think in our first, now about a year into this, a year and a half. I would say that's the case. I mean, what I'm encouraged by is that even the folks that find us coldly, just through our website, very few of them are, I'm selling perfume on the internet, right? They've sought us out, and so I think in our case, because we're a little niche and specialized, even our sort of inbound traffic seems to be people are doing the work to qualify us. But for all the reasons I said before, the fact that government is an increasing presence in a lot of innovation in our country. And at the state level, our thesis overlaps so well with some of the early stage growth industries. Deal flow has not been a problem for us. And in fact, I think what's happened over time too is we've started to even prioritize the areas that we see what are the accelerants and what are the brakes. So there are some industries that we see a lot of deal flow in that we increasingly spend less time in because we're not comfortable with the regulatory environment. Some of the online gambling stuff is an example of that, where it's just very Byzantine, very complicated, a couple of big players in the space already. And so there's been a lot of early stage companies in Florida that we've just, we've spent time with and coached them and talked about, but we just haven't seen as great investment. So the deal flow has been great from that perspective. On the investor side, look, valuations are lower. They've not dropped as much, for seed stage, which is where we like to enter. So we'll do seed to Series A, but we'd love to get them at the seed stage and then be more of a follow-on at the Series A.
Seed for you defined as?
Seed for us is early revenue, right? Okay. Or revenue's right there, like the contract's there, and they're just about to execute, right? So there's an initial team, there's revenue, there's a real business. Probably have raised some friends and family money, and now we're that first more professional capital that's coming in. Valuations there have gone down a little bit, but not as much as some of the stuff you've seen in the B and the C rounds, right? And if you've rated the pitch book data, it says that. But what has been rewarding for us, I think, as a validation to our thesis is the entrepreneur's interest in working with us, because we want to be perceived as capital that's beyond just capital. And I think the entrepreneurs are seeing us as that. And that's allowed us to lead some rounds. I like to lead rounds. My understanding is there's a lot of funds in Florida that don't like to lead rounds. We prefer to, because we get to set the terms, or at least negotiate the terms, right? So we're at the table negotiating with the entrepreneur, which is I think a positive for us and the entrepreneur and our investors. Plus, if we're going to be heavily involved with the company, it's much better to do that from a lead position. But to be candid, if you measured the lead, who was the lead only based on the biggest check, we might not have been the lead. Uh-huh. So to us, that's exciting, because it means the entrepreneurs see the value in us beyond the check. Someone may write a bigger check, but they want us to be the lead. That's been great, and hopefully works out to the benefit of our entrepreneurs and ultimately our investors.
One of the questions we like to ask anybody who's investing into particularly an early stage startup: how much of your analysis is based upon the business model, the plan, the product, the service, whatever it might be, versus investing into the people behind it? What does that look like for you? Well,
look, it has to be both, but the jockey, we were talking about this before we even went live today, right? The jockey matters.
Yes.
Right?
Yeah.
A lot, because there's a lot on his or her shoulders, right? Look, again, having sort of, having been involved with a company that when I joined there was a cassette manufacturer billing $500,000 to when I left it being a part of a publicly traded company at that point north of probably 300 million with thousands of employees. There's a lot of change that happens in that. Mm-hmm. So if you're realistic, the founder I know entrepreneurs don't like to hear this, but the founder may not get you to A to Z,
Yeah.
but you're not getting to B or C without that founder, right? And so as the early stage investor, you've got to be comfortable that person can get the business pretty far down the line. So it matters. So I guess the easiest way I say it is what we look for is conceptually, we have to look at the business and the business model and all the competitive analysis on one that can yield the return that we expect, and then has a team that can articulate kind of the A to Z, but we certainly have a lot of confidence in their ability to execute from A to D, E, or F. Without that, the jockey matters. The jockey matters a lot. A lot.
Picking up on that for sure.
Sure,
Yeah,
of course. I don't
absolutely.
think any early stage investor would tell you anything anything different, right? Private equity is a little bit of a different animal at that point, right? Different maturity in the business.
Thesis government, wild success early on with a couple of ventures, and obviously now you've got this fund. The thesis is government. What are some of the risks associated with that thesis? For example, you're writing a check, government regulations, something is written, that could open up a new frontier.
Yeah.
You're feasting on that.
Yeah.
What's the downside of this? What's the risk
That the regulation becomes famine. I mean, that there's no doubt. I mean, that is the risk.
And what about? I would assume some others as well, potentially. The sales cycle. Is there risk associated with that? Where there's, the notorious government and some other bureaucratic industries that have layers of decision making. Is that also part of the challenge?
Sure.
And
yeah. So let's separate sort of the two types of companies.
Sure.
So anyone who's selling to government, when we look at the business model, particularly the cash they're going to need, that needs to be part of the equation. And by default, which is a positive, the entrepreneur will often assume that things will happen much more quickly than they do. And they almost never do, right?
that's where your experience comes in.
Well, right. I've been guilty of it as anybody, right? I mean, whether it's you hit it a quarter later or 2 quarters later or 4 quarters later, right? It just does. And government definitely is only exacerbates that. The flip side, of course, is once you're in government, it's harder to dislodge you. So there's some puts and takes there. So on that one, it's really just reviewing the business model. How realistic is it? How does the capital raise fit into that? Where are you from a cash burn perspective? Are you so enthusiastic? Don't be too enthusiastic where the revenue is coming in relative to your cash. On the regulatory side, look, as we all know around this table, early stage investing is high risk to begin with, of course, right? Because of the maturity of the companies, and you layer in the fact that a change in government regulation could, in some cases, put the company out of business. That is another factor. That's kind of what we have to get paid to do then, right? To upfront. I mean, I gave you my thoughts before on the gaming industry and why we don't feel comfortable there, because we don't feel like we have a crystal ball to be able to understand where that marketplace is going. It's too murky for us. We are really not that interested in things that have FDA approvals, highly regulated, right? People would say we do get a lot of proposals from folks who are doing drugs or medical devices, and I very quickly say we're not. It's not our expertise, right? We don't understand it as well as others. It's a little too binary for me, right? There's not always a plan B or a plan C when the FDA tells you no. So we try to take some of that into account in terms of who we're targeting in the space. But a lot of it, whether we decide to invest or not, and that risk quotient to some extent is why, we I get how we're going to get measured at the end of the day. But no doubt that's a risk.
In a prior discussion with somebody, we were talking about the advancement of technology and how fast it's accelerating versus the human's ability to be able to adapt to changing technology. And is technology accelerating at such a fast rate that humans can't keep up with it? And where's the crossroads, or are we already there or getting pretty darn close to it? So I'm curious, when a technology company comes to you, and I'll just use an example, like urban air mobility. Everybody's creating drones or electric vehicles that can fly or flying cars, and the technology is getting very close to being there, but the infrastructure, the regulations, et cetera, aren't there.
Yeah.
How do you look at a company like that may be very advanced technologically, but when it comes to the government side, we're not even close to really being there yet?
Yeah.
How do you handle that?
Yeah, it happens all the time. It happens. It happens all the time. It varies a little bit, obviously, by the company, but so in some cases we're going to make more of a global, longer range bet. In some cases, we're going to get real tactical and not do anything until a very specific regulatory change is made. So it sort of depends where the company is maturity. There are some companies we're looking at that we're very interested in what they're doing, but unless something tactically changes from a regulatory standpoint, not globally, like specifically, a specific regulatory agency needs to do something to allow not just their business, but other businesses to do something. I don't want to go into too much detail on it. We're sort of on the sidelines on it. There are others where we're looking at more of the macro environment where, again, I'll make the online gaming thing, where we've made a macro decision where we don't think the technology, the infrastructure, and the regulatory environment add up to each other, right? We talked a little bit about AI before. We're much more interested right now in AI companies that are more application-based. Again, I think Kathy was talking a little bit about this. Ones that are solving immediate business applications than some of the broader things that might have more serious implications that are going to end up getting wrestled at Congress, right? And if you guys, the founder of OpenAI was on Joe Rogan a couple of weeks ago. Go listen to that 2.5 hours, because the stuff they're talking about there in terms of impact on society and regulation, to filter that down right now to make a decision as an early stage investor, at least for us, tough, right? Tough to do, but on an application layer, it's easy to do because they're flying under the screen of that radar. So hopefully that answered it for you. It is a little bit of a challenge for us. Again, sometimes it's strategic and sometimes it's very tactical around a specific regulatory issue.
Yeah. Rob, you mentioned about at one point running for office.
Yeah.
I'm not going to ask you if you have aspirations to do that again, but I will ask you, if you were to look at, if you were to put a running for office hat on and then look at our ecosystem today, like what are the things that the state of Florida needs to do to continue to bolster this startup, ecosystem?
Yeah. I have no plans to run for office. Certainly the minute I'd made a decision to go start a venture fund and start raising money from people, that would seem an inappropriate thing to do. Hey, by the way, guys, I'm leaving to go do something. Right. I wouldn't be able to look myself in the mirror. At the state, first of all, I actually think that at the level of company we're talking about, I think the local dollars matter as much as the state, right? So I mentioned in Central Florida, I think the ability of that ecosystem to grow has really taken a partnership between the private sector, entrepreneurs, stepping up and saying, hey, I want to be part of this, and throwing some of their own largely philanthropic capital in most of this, right? Occasionally some of these are for profit, but in general they're not. And then government comes in to support it. So I would not just categorize this as a state issue. I think it's a local issue. And so I think anything we can do to continue at the local level to continue to reinforce the importance of these types of programs at universities, in the private sector, is very critical. And in fairness to politicians who often get criticized for short-term decisions, investments in this space are not short-term decisions, right? Because the incubator or the accelerator you're feeding today isn't likely to have any meaningful job growth, which is ultimately how they're going to want to measure this for 5-10 years, right? Probably when they're out of office, right? So I do think that's an important thing. At the state level, I would say I think I would love to see the state, just in terms of its communication, talk more about the importance of the growth of scalable entrepreneurs in these technology sectors. I think, statewide economic development tends to be more about larger companies, although obviously the state's made a lot of changes lately with the changes in Enterprise Florida. But I would love for just there to be more communication on that. When the mayor of Miami several years ago, just on Twitter did what he did, crypto's had a lot of change in the last couple of years. But when you get a public figure basically to say to California and to Silicon Valley, yoo-hoo, you should be paying a lot more attention to what goes on here. That had enormous benefits to the community, to Miami and then ultimately to the state. So words do matter. And I would like to see more at the state level, more communication about the importance of the work that's happening in places like this and in Miami and in Jacksonville, all the things we've been talking about here, and the importance of its growth in the state. Because, as we all know, we've all seen the numbers, right? Most jobs are created by scalable small businesses.
Yep.
Right? And particularly in a state that has been, because we're largely tourism-based, we are lower wage than other states. We offset some of that by cost, but our costs are going up. So we need to continue to make sure that our wages continue to grow. And we also have these amazing state universities turning out this talent that we want to stay. So we have to create opportunities and jobs for them. Scalable, technology-driven businesses has to be an important part of that. So I'd love to see the state make that more of a strategic focus, even in its communication.
Great responses, and thanks so much for the work that you do within the state. And how do, understanding the thesis, how do startups get a hold of you that might be aligned with the fund?
Yeah, easiest thing to do. Our website is www.govovp.com, or find me or my partner Jonathan Kilman, both of the Florida guys. Find either of us on LinkedIn and reach out. We're good at reaching back to people pretty quickly.
Very good. Rob Panepinto, Managing Partner, Chief Investment Officer for Govo Ventures. Appreciate it. Thank you so much for being on the podcast today.
Thanks for having me, guys.
Thank you.
Remember to subscribe, like, and share the Sunshine Startups Live podcast and follow us on social media. If you're interested in sponsoring or appearing on the show, please email us at booking@sunshinestartups.live.